So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to The Daily Call from Option Alpha. Hey everyone, this is Kirk here again at OptionAlpha.com, and welcome back to The Daily Call. Today we're going to be talking about the impact of time decay, or theta, on credit spreads. So credit spreads, as many of you know, are option strategies where you are buying one contract and selling another contract. Typically, you're doing a credit spread out of the money. So if a stock is trading $100, you might sell the 105 call options and buy the 106 call options, creating a call credit spread or bear call spread. Now, the impact of time decay on credit spreads can vary. And I say this because it has a lot to do with how far out you are selling options and also the spread width between your buy and your sell of the option contracts. Now, the thing that people don't account for when they trade credit spreads is that you'll typically have to hold credit spreads a little bit longer to see profits materialize. And depending on how wide you make those spreads might also impact the holding time. And we've seen this a lot in some of the backtesting research that we've done and then published on our profit matrix report. But what you don't factor in, or what many people don't factor in, is that when you are buying one contract and selling another, you're basically negating the impact of time decay or theta decay on those contracts down to a very, very small differential between the contracts. So for example, if you have a $4 time decay or theta decay on your short call options, that's great. But when you buy the long 106 call options in the example I gave before, you might also be paying a $4 or $4 and change time decay impact on those long options. So what you gain on one option contract could be basically canceled out or zeroed out by what you pay on the other option contract. This is why I say that it has a lot to do with how wide you make your spreads. Because if we are selling an option close to the money or at the money, and then buying options much further out to give ourselves protection like you would in an iron butterfly situation, in that case, you actually would be collecting hopefully some positive or more positive theta decay overall, because your options at the money have really high intrinsic theta decay, and the options further out of the money have very low theta decay. So in that case, you'd be collecting a higher net differential, but you have to make those spreads very wide and therefore take on a little bit more margin and risk to make that trade. So again, it's not something I necessarily check all the time. It's something you should know kind of intuitively in the back of your mind. If you're trading a spread and you're doing a $1 or $2 wide spread, you're probably not going to get a huge impact on the option price in just pure theta decay. Those options will decay in value, but you're going to get more bang for your buck by seeing implied volatility drop or by seeing the stock price drop or the stock price go up, however you want the stock price to go in that particular trade. That's where you're going to get a lot of that impact. It's just going to take a little bit longer for profits to materialize. Not that they can't or they won't, because we've seen in many cases in backtesting that still selling spreads is very, very profitable. It just means you might have to hold them a little bit longer. So hopefully this helps out. As always, if you have any questions, let us know. Until next time, happy trading. Thanks for joining us on The Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on The Daily Call from OptionAlpha.com.